Le pido al equipo de producción que por favor nos ponga a Darius Dale y tenemos excesivamente una gran cantidad de digamos, alegría por tener aquí a Darius, no solamente por quién es Darius, sino porque efectivamente en un momento histórico como el que estamos viviendo nosotros aquí, él, para que usted tenga una idea, tiene una compañía en donde él se encarga de darle esas ideas de hacia dónde debería ir el flujo del dinero. Darius, thank you very much. We're very happy to have you here. Obviously, you are seeing my passion trying to entertain the audience. But the most important part is I was telling the audience, Darius, that you need to make a kind of an assessment of how are you going to do a valuation of the Fortune 500 companies so you can see what is the floor of this meltdown, if any, and what you will do in this time where you don't know what's going to happen with the trade and with the potential things that might happen within the next few days. Thank you very much. So tell us a little bit, give us a little bit of guidance about that, Darius.
Victor, thanks for having me. I appreciate you, brother. So I love your passion, by the way. It's great. It's infectious. The number one thing I will say to investors is you're not going to have all the answers, so be comfortable being uncomfortable in these moments. That's number one. Number two, I think it's very important that investors operate with the checklist on what they need to see to feel comfortable allocating assets in a bear market. That checklist for me, I think it always should start with what is the Federal Reserve's monetary policy response? From our perspective, the Federal Reserve is at least a few months away from supplying the quantitative easing or large-scale asset purchases that this market likely needs to bottom. So that's number one. It's a three-point checklist. Number two in that three-point checklist is where are consensus estimates? Right now, consensus estimates on the sales and earnings front and with respect to GDP continue to signal an economy that is slowing but not yet falling off a cliff. And I would argue the economy is more likely to fall off a cliff. So we need to see earnings estimates taken down. And then finally, one of the main dynamics that I think is being underreported is the fiscal policy track. One, we have Doge, which is likely to shave $1 trillion off of the federal budget, which could, in isolation, could potentially push us into a technical recession. So we have to see how that process unfolds. Will that get less onerous? And number two, 2A or 2B rather, or sorry, number 3B rather, how is the tax cut program going? Are they going to, is the Senate going to win the debate between the House and Senate and essentially legislate a larger tax cut package? Or are they going to, is the House going to win that debate and legislate a mere extension of the Tax Cuts and Jobs Act, which would not be very stimulative?
Listen, and even though you are an excellent, let's say, teacher, quote unquote, with all this, the level of confusion is huge. Let me just ask you a couple of questions, and then when you answer, after that, I'm going to explain them in Espanol, even though there is subtitles, but I want to make sure they get it.
Of course,
you are mentioning that because of the cut with Doge, we might be taking off the budget around $1 trillion. Let's say it's $500 billion. That's enough to cause a potential recession. But in the other corner, if Donald Trump is trying to, up to some point, stimulate the internal demand and trying to cut taxes, that it will be potentially inflationary, even though the costs are going to go up because it's going to be an inflation of costs where you're seeing if everything goes as planned tonight. So you're telling me that even though you don't see yet that they cut earnings estimate, you and I know that you don't have to be too much smart to understand that probably JP Morgan and perhaps Morgan Stanley and Wells Fargo that are going to report on Friday on the beginning of the earnings season reporting, they might going to say the outlooks look as ugly as it can be for the next foreseeable future. So what do you think is going to happen with the estimate? They're going to start slashing estimates. Do you think the market is already pricing that? Or you think that the market might tank, as Larry Fink was telling yesterday, we might go down another 20%, Darius?
Well, I don't know if Larry Fink's talking his own book there, but I'm not smart enough to know how much further the market can go down. I know that in a recession, an actual recession scenario, we likely have not seen the bottom because that ultimately requires a significant reduction in earnings and GDP estimates that we have not seen yet. we know that is likely ahead of us. The depth will the size of the recession will determine the depth of that. But to me, I think we have to go back to this fiscal policy debate because the markets are so myopically focused on only one aspect of the Trump administration agenda's fiscal policy. Tariffs are a very big and obviously market-moving catalyst, but don't forget, DOGE is still out there trying to slash 15% of the federal budget. Elon has confirmed this several times in the past few weeks. We also have this debate around taxes. Is the tax cut going to be stimulative or not stimulative? It's usually a function of, is the Senate going to win the debate or is the House going to win the debate, the deficit hawks in the Congress? And so to me, I think when you we should get away from trying to anticipate how much is the market going to be down and just accept the fact that the market is going to trend lower until one of those or multiple of those three things that we talked about earlier comes to true. Fed's expanding its balance sheet. We see some backing off of taxes and DOGE. Sorry, the tax cut is stimulative, and we see a back off of DOGE. And ultimately, we need to see consensus take their estimates down. We're very early in all three of those processes, by the way.
Listen, give me 1 second. Let me try to explain that in español very quickly. Mira, nosotros hemos traído a la tribuna, como ya les había dicho, a Darius. Darius es el CEO de una compañía que se llama 42 Macro, que entre otras cosas son las compañías que le entregan las ideas de negociación hacia dónde va el termómetro global macro a los grandes manejadores de dinero que están probablemente dentro de su cúmulo de clientes. Él ha aceptado gustosamente a tratar de estar en nuestra tribuna y es obviamente una de las personalidades que va a los demás canales en inglés. Lo interesante y lo importante es que le estamos preguntando cómo está el proceso de valoración. Y él lo que nos está diciendo es que si usted suma lo que va a recortar el Departamento de Eficiencia, que se estima en $1 trillón de dólares, que si usted suma todo lo que está pasando con las tarifas, donde la inflación se nos está yendo, las armas que tendría el gobierno con respecto a saber si el Senado o la Cámara de Representantes ganaría cuando pasen una ley que recorte impuestos, si eso va a ser suficientemente capaz de reactivar la economía, cuando él también piensa que no hay que ser muy inteligente en saber que estamos yendo indudablemente hacia una recesión. Indudablemente no están todos los componentes dados en el tapete, pero la siguiente pregunta que le tengo que hacer a Darius, se las hago a ustedes primero en español, se las explico, es, bueno, ¿por qué si todo esto está cayendo? Y obviamente la idea es que puede venir una estanflación que es de crecimiento con inflación. Yo estoy viendo el bono de 10 años que estaba en 3.88 en 4.23. Darius, I was telling them and trying to explain them what you were saying, but one of the things that I don't get it, and probably if you are not smart, you can imagine myself, because obviously you are smart. In any case, I'm seeing the markets tanking as we speak, and we see the S&P going down almost 2.5%, the Nasdaq 3% down already. So the bounce are huge. But I'm seeing as we speak that people are also selling the 10 years heavily, because it's the only way you are seeing, obviously, the 423 handle, 422, 424 handle. What's going on there? For me, it's like a lack of the typical correlation here, and it's not a safe flight to quality. And I'm assuming that the Chinese are unwinding, but that's my own assumption reading. What do you think will happen with the 10 years?
Yeah, I think this is one of the great stories of our time, is the unwind of this American exceptionalism theme and the great splintering apart of the former geopolitical framework and this concept of globalization that has caused a lot of money from around the world to wind up in our bond market, to wind up in our stock market, and to wind up in our real estate market. And what I think is likely to happen is if the rest of the world's capital allocators, of which they own a net $24 trillion more of our assets than we own of theirs, those investors are looking around and saying to themselves a few things. Number one, the U.S. is not playing nice in the sandbox anymore as it relates to geopolitics. Number two, the U.S. isn't playing nice in the sandbox anymore as it relates to the general globalization. And then number three, which is something that I don't think investors are going to talk about a lot this year, but they certainly will next year, is they're no longer playing nice as it relates to the fiscal sustainability outlook for the United States of America. We have a debt to GDP ratio north of 100%, a debt to liquidity ratio north of 100%, and Congress is in the process of potentially legislating an additional $7 trillion of debt onto the public sector balance sheet in the form of the extension and expansion of the Trump tax cuts. And doing that at a time where the rest of the world is pulling back on U.S. investments is pretty scary in the context of what could potentially happen to the long end of the bond market. So I think what's happening today may be a precursor of what may happen in subsequent years as it relates to the rest of the world's unwillingness to continue financing and subsidizing our fiscal profligacy.
Excellent. So now I'm gonna put you on the spot. Okay. You, when I was telling them in Espanol, you have this company 42 Macro, you basically analyze what's going on the macro level, and you gave your client, institutional client, major institutional clients, ideas, how to manage risk, what you are seeing in terms of monetary policy, inflation, and so on. So now, today is the 8th of April in front of this major event at midnight Eastern time in the US. So where do you put your money? I mean, you're saying be comfortable being with this uncomfortable situation, but if they have to ask you, where do you put your money, where you are seeing people selling also the 10 years, that's the question. Where do you put your money? Do you gonna go to gold, which is the only one I'm seeing green? Do you think that's the name of the game?
Yeah, Victor, let me, can you throw this chart on the screen? I got a chart.
Oh, yes.
Let me see. Where I put all of my money follows the 42 macro case portfolio construction.
Give me one second, Darius. I want to tell you en español. Una de las cosas que le pregunté, para que estén entendiendo, es que él está diciendo específicamente el oro. Por eso lo queremos escuchar. Darius, try to speak slowly so the subtitles will pick up exactly what you're going to explain about the asset allocation, please, and also this slide.
Yeah, absolutely. So like I said, all of my money is following this system. It's a simple, systematic system that is designed to do two things: help investors participate in the secular bull markets in stocks, gold, and Bitcoin, but also risk managing cyclical bear markets by raising cash ahead of those bear markets. And one of the most recent pivots that the system made was in early March, it took down its exposure to stocks to 0%. So since early March, we've been at 0% equity allocations with cash waiting to buy the dip in stocks once the systematic model tells us to buy stocks again, which fundamentally I expect to be within 2 to 3 quarters. Could be shorter, could be longer. I have no idea. I'm not smart enough to tell the market when it has to bottom or at what level, but I am smart enough to figure out what to look for in order to sort of gauge that process. And so where else have we got? So we're currently at 67.5% cash. We're at 0% equities. We're at 30% gold. That's maxed out. The maximum exposure to gold in this system is 30%. And then we're at 25% of our maximum exposure of 10% in Bitcoin in this system. And so this is how my allocation, my portfolio looks. This is how thousands of our clients' portfolios look because the system works.
Wow. Listen, well, I got to tell you, we're very happy to have you here. It's a luxury for you to talk to us with our audience. As you know, we're growing. We're now putting this program from the Miami area, Negocios TV America, but we're an extension of everything we do at Negocios TV. And our audience has been huge in Mexico, in the US, Peru, Colombia, Chile, Venezuela, with all these major people are seeing, plus my institutional friends, quote unquote, that are going to start seeing the same faces that you are seeing in other TV stations in English coming to us. I'm super happy. I'm going to keep seeing what you're doing and bring you back because the rate of change is so fast that we don't know what happened. So we need your advice. Thank you very much, Darius.
Thank you, Victor. God bless. And congratulations. I saw you got over 2 million, man. That's really, really impressive. Keep going. Appreciate you.
Excellent. Thank you very much.